Good day. Today we'll be revising the chapter Introduction to Income Tax. You'll be getting most of your 2 markers from this chapter. This chapter majorly consists of your rate of tax as well as some of the definitions. We'll dive into the definitions first. What do you mean by tax? Tax is compulsory contribution made by any citizen of the nation to meet various expenditures of the state. There are two types of taxes. One is direct tax, the other one is indirect tax. What is direct tax? Direct tax is a kind of tax where incidence and impact of the tax is on the same person. What do you mean by incidence? Incidence is the person who is supposed to pay tax. Impact is the person who is actually paying tax. That means incidence, if the incidence and impact is on the same person, then you call it as a direct tax. And if incidence and impact of the tax falls on different people, then you call it as indirect tax. Then comes the definition of assessment year. Assessment year is the period of 12 months. It starts from 1st of April and ends on 31st of March every year. The previous year is a financial year just before this assessment year. Whatever income you're earning in the previous year, you're going to pay in assessment year. Say, for example, if I say I have earned my salary income of 12 lakh rupees from 1st April 2021 to 31st of March 2022, that is called as previous year. I'm going to pay tax for the same thing in the assessment year, that is 2022-23. See, if I join a company as an employee or I set up a business during the previous year, which is somewhere in middle of the previous year for the first time, then my previous year will start from the date when I'm actually setting up the business or when I first joined there as an employee. Then comes the definition of a person. This person will include an individual, a Hindu undivided family, a company, a firm, an association of persons, a local authority, and an artificial juridical person. Then comes casual income. This casual income is unanticipated and non recurring in nature, and you're not very sure about what is the source of such income. Say, for example, winning from lottery, horse race, or winning from crossword puzzles or card games. These kind of incomes are directly charged at the rate of flat rupee 30%. Then you have the rates of tax. There is something called as existing scheme, and there is something called as alternative tax regime. First, we need to see what is existing. In the existing scheme as well, you're going to see what is the age of the person. If the person is a resident and he is a super senior citizen, then up to 5 lakh rupees, there will be no tax. For any income which is 5 lakh to 10 lakh rupees, the rate of tax will be 20%. If the income is greater than 10 lakh rupees, the rate of tax will be 30%. Say, for an example, if I have an income of 7 lakh rupees and I'm a super senior citizen, then up to 5 lakh rupee, it will be nil. And between 5 lakh to 7 lakh, I have 2 lakh rupees in that slab. Only for the 2 lakh rupee, I'll be calculating tax at the rate of 20%. Moving on. If he's a resident senior citizen, that means age of that person is greater than 60 years, my slab rate will change a little bit. Here, if the income is up to 3 lakh rupees, there will be no tax. Then, if it is between 3 lakh to 5 lakh, the rate of tax will be 5%. If it is 5 lakh to 10 lakh, then it will be 20%. If it is greater than 10, it will be 30%. In the same way, if the person is a resident person who is less than 60 years, or if he is a non-resident of whatever the age group, then his slab age will be up to 2.5 lakh, the rate of tax will be nil. From 2.5 lakh to 5 lakh, the rate of tax will be 5%. 5 lakh to 10 lakh, the rate of tax will be 20%. Above 10 lakh, the tax will be 30%. Then there is this concept which is known as the rebate, which is under section 87A. For inflation, this is available only for a resident citizen and his income is less than 5 lakh rupees. If both of these conditions are satisfied, then it will be 12,500 or the actual tax amount, whichever is lower. Say, for example, when I compute the tax, if I get a tax of say rupees 10,000, then the rebate will remain 10,000, not go to 12,000. This rebate will be reduced from whatever is the tax I have already calculated. Then comes a thing which is called as surcharge. Surcharge basically is a tax on additional income. Say, for example, if I have an income up to 50 lakh rupees, there will be no surcharge. If it is greater than 50 lakh to rupees 1 crore, Then 10% of whatever the tax amount I've calculated in above methods will be added as surcharge. Say, for example, if my tax was say 5 lakh rupees, the surcharge rupees on if under this slab would be 5 lakh into 10%. That will be added to your tax income. Then second slab is 1 crore to 2 crore. If it is 1 crore to 2 crore, the rate of surcharge will be 15% on tax amount. If it is 2 crore to 5 crore, then it will be 25% on tax amount. If it is 5 crore, 37% for tax amount. Above all of this, there is something called as health and education tax. That is 4% on income tax plus such in all these. Then there is something called as alternative tax. A person of alternative tax regime or existing tax. What is the difference between alternative tax regime and normal tax? If you're opting for existing tax regime, you will be provided with all kind of deduction and allowances. If you're alternative tax regime, there are certain deductions which are not available. There is a list of such deductions which are not available. Say, for example, leave travel concession, house rent allowance, special allowance, allowances to MPs and MLAs. There is something called a standard deduction of rupees 50,000 for all salaried employees that will not be available. A reduction of entertainment allowance, which is there only for government employees, that will not be available. Deduction of corporation tax is not available. If you have any self-occupied property and if you're paying any interest on such loan, then even that deduction will not be applicable. After taking out all these kind of deductions, the rate of tax is reduced whatever you have in the normal regime. What is the tax regime as what is the slab rates as per alternative tax regime? If your income is up to 2.5 lakh, then the rate of tax will be nil. If it is 2.5 lakh to 5 lakh, the rate of tax is 5%. If it is 5 lakh to 7.5 lakh, then the rate of tax is 10%. If it is 7.5 lakh to 10 lakh, it is 50%. If it is 10 lakh to 12.5 lakh, then it is 20%. If it is 12.5 lakh to 15 lakh, it is 25%. If it is 15 lakh, then it is 30%. You can see here, there's a trend of rupees 2.5 lakh increase in each and every slab. And in the rate of tax slab, you will be seeing a 5% increase from one slab to other. And it will end at 30%. If you are aware of these things, that is something called capital receipt. What is a capital receipt? This is non-recurring in nature, and this won't be arising in your ordinary course of business. If you want to have some examples regarding these, say for example, if you have received any insurance on loss of capital asset, that will be called as capital receipt. Or if there is any premium on issue of new shares or debentures, it is called as capital receipts. Then there is something called as revenue receipts. These are the receipts which are recurring in nature, and these arise during the ordinary course of business. Some examples for those are compensation received for loss of profits, a dividend and interest. All your general sales and whatever amount you receive regarding these sales, that is also called as revenue receipts. Then there's called as capital expenditure. What is capital expenditure? It is something with some amount which is used by the company to acquire or to upgrade any asset. Some examples for this is cost of acquisition of asset, cost for increasing the earning capacity of such asset is called as capital expenditure. What is a revenue expenditure? This is some kind of expenditure which is used for maintenance of such asset. Say this kind of expenditures keep happening in ordinary course of business. Some examples will be interest on loan, maintenance cost of such assets, etc. Capital loss. These again the same thing. This kind of losses will not occur in normal course of business. Some examples for that will be loss on sale of furniture or issue of shares or debentures at discount, not at premium. If it is revenue loss, then it is embezzlement of cash or bad, etc. There's some important abbreviations which you'll have to be aware of. One of them is CBDT, that is Central Board of Direct Taxes. Second one is CIT, which is Commissioner of Income Tax. Third one is ID, that is Income Tax Officers. That next one is TRO, that is Tax Recovery Officers. The next one is DGIT, Director General of Income Tax. After all this, if you read some of the big questions such as features of income tax or some other sources of income tax, then probably you'll be done with this chapter. We'll meet in next series of YouTube video, and we'll be discussing the related aspects of the exam. Thank you.